Good morning, good afternoon, good evening to all our participants from across the world. My name is Biharilal Devra and I'm a volunteer with CFA Society India. And I welcome you all for our today's webinar, Career Insights on Investment Banking in India. Well, investment banking is a preferred career choice for many of us, especially CFA candidates and charter holders. It is lucrative, intellectually stimulating, and offers high growth opportunities with access to C-suite executives. Today, the industry landscape is dotted with global bulge bracket, their Indian counterparts, and several boutiques, all trying to carve a niche for themselves. And as investment banking expands, it creates the need for talent, which brings opportunities for aspirants. How does one make a career in investment banking? How do investment banks source talent? And what attributes do they look for? What are the roles and responsibilities of investment banker? Let's find out answers to all these in today's webinar with our speaker, Anurag Agarwal, a CFA charter holder and managing director for corporate and capital markets at CLSA. Welcome, Anurag. While I introduce Anurag, I will request Harshad to run our poll on why you want to become an investment banker. Now, Anurag has an interesting career. He's currently the managing director for corporate finance and capital market department, largely responsible for origination. He's in regular touch with mid and senior level management working in Indian corporates and target clients for capital market and advisory transaction. For almost 16 years, he's been working for almost 16 years, out of which 13 years have been in investment banking, and he joined CLSA in 2007. For those who know Anurag, he started at the bottom of the pack as a management trainee in HDFC Bank, and later on worked as a financial controller. Post his chartered accountancy before he decided to do his MBA and then move or switch gears into finance. Welcome, Anurag. I think the poll is up, so give us a moment, and I think once we have the poll numbers, we'll share it with you, and then you can kick off. For our participants, if you have questions, please keep on typing in the Q&A tab at the bottom of your screen, and we'll take them up during the webinar and towards the end of it. A copy of this presentation will be available for you to download towards the end of the session. So Anurag, the results are there in front of you, and the floor is all yours.
Thank you, BD. I would say welcome everyone. Thank you for joining the webinar, and good morning, good evening, good afternoon, depending on which country, which time zone you guys are residing. I hope family, friends, colleagues are all doing well, and COVID has not impacted your lifestyle to the extent beyond staying at home. I think everything is healthy. Let me kickstart, and this was a poll which I actually wanted people to kind of do just to understand what people understand by investment banking, because during my so to say BD made it too long, but I think it's a short career, short and sweet. So my understanding of investment banking is still evolving, to be honest. And every day I get to learn new things and I get to experience new things. And I see that not many people are aware actually what investment bankers do in real sense. So I just thought that this will be a good start to it. And maybe we will come to the answer where the majority of the people are saying good corporate connect and money. We will come to it as I'm going through the presentation. So let me start with the first important slide for everyone to understand about investment banking. Investment banking is a term which is very loosely used by people for various things. Broking, research, corporate finance, sometimes together are also referred to as investment banking. Only corporate finance guys also are referred to investment bankers. And then you can kind of have other interpretations also, which you would have shared in your life. And had we been in a face-to-face seminar, maybe I would have kind of given a chance to some of you to tell me what you have heard as investment bankers. But just to be very clear on investment banking, in a real life, in the real life situation, there are people who use the capital which is available, and there are people who provide the capital which is there. And when I say capital, it can be equity capital, it can be debt capital, it can be even share swaps if you're doing an M&A, all that is in capital in a way of kind. There are people who are on both sides of it. And we have a clear Chinese wall, which is a, I would say, much overused word in investment banking parlance, but Chinese wall which separates the two sides in a way. So there are guys who deal with the provider of capital, and those guys, those people are who write research on companies or trade in stocks or provide sales and trading services. The providers of capital are commonly like mutual funds, pension funds, high net worth individuals, long only funds, and so on and so forth. And I'm told that there have been prior webinars on some of these fund-based career options also. Now, sales, trading, research are people who deal based on information which is available in public domain. This is a very important distinction for investment banking, because as per law, insider trading is not allowed, and anybody who trades in the market is supposed to trade based on publicly available information. And those people who kind of deal with the providers of these information are also on the public side. As soon as you cross the Chinese wall, you enter into the domain of investment banking, which is people like us, who are in touch with people who will consume capital, mostly corporates. Then there are governments or quasi-government bodies who use the capital for either investment purposes or further growth purposes or capital expenditure, or they can be n number of uses of capital. And as investment bankers or corporate financiers, why we say corporate financiers? Because as I said, one of the user of capital is corporates. So we are people who kind of help those corporate get that fund, and hence sometimes we are also called as corporate finance team, capital market team, depending on various nomenclatures which you will come across in your lifetime if you hear investment banking. Now, investment bankers are on the private side of the Chinese wall, and this is a very important, but this is a very clear distinction which one has to understand. When we are talking to a corporate or a government or anybody who uses capital, they talk to us about things which may or may not be public. And there may be a non-disclosure agreement which is between the investment banker and the company, and after which the information is disclosed. Because for us to take a decision whether we can help that company, whether this company actually needs this capital, whether we can get them this capital, it is important to know things beyond what is there in public domain. Because then only we can kind of prepare them for getting ready to raise that capital from the market. And I am again and again saying capital, but there are 3 prongs or 4 prongs to investment banking, and I'll come to it what investment bank actually does. But I hope this distinction of private and public side is clear, because if you're on private side, then obviously there is heightened restriction on what you can trade and not trade depending on your organization policy. And it is also important how you are engaging with research and sales trading is kind of monitored or restricted, because you have access to a lot of information which on a daily basis can move the share price. And hence it becomes a responsibility of the investment banker to use that information more for purposes for which it has been shared and not for any other purpose, right? So with that distinction being clear, let me move to what actually we do and why this may be interesting to lot of you. So we as investment banker or corporate financier deal in various kind of products. namely, we deal in equity issuances of the company. When I say equity issuances, it can be either an initial public offering where you are listing on the stock exchange for the first time, or it can be a follow-on offering by the same company where they are raising money. Although they were listed, they are raising money, and they can have different nomenclatures of it. I'm not getting into it right now, but it can be follow-on offering, it can be QIP, it can be rights issue. All these are various types of follow-on offering. It can be also a ADR, GDR issue. Equity can also happen prior to the company gets listed. So it can start from the stage when company is seeded, and then you get the first seed capital from angel investor, followed by money from venture capital investors. Then further you grow, and then you are funded by private equity. In private equity, again, it can be smaller fund, it can be growth capital, which is a little larger, it can be buyout, which is for majority. So there can be, I can keep going on confusing you, but net it is raising equity for the company. If you want to remember one thing, this is what it is. Second thing is raising equity linked products, which is like convertible instruments in simplified. Again, they can have a lot of nomenclatures. It is foreign currency convertible bonds, exchangeable bond, convertible preference shares, convertible debentures, so and so forth. But net it is equity linked. That means it is either it will be compulsorily convertible or optionally convertible. And third will be debt capital market or debt financial services, where again, there are two ways of helping them raise capital. One is by placing a bond for a company using the international rating or domestic rating, a bond for that company. Or it can be also placing loans or ECB, which is called external commercial borrowing. Like equity, there can be capital which you are providing as structured finance to various companies, which can be certain amount of money at a rate which is in between loan and bond, with certain covenants which you bilaterally decide between the investor and company. So debt is a little more in depth. I can tell you the debt markets overseas are much more deeper and developed vis-a-vis India, and I think we are moving in a direction where one can say that surely during our lifetime, the debt markets in India will be much more developed than what they are today. The fourth important prong of what we do is M&A. And in M&A, it can be acquiring a company, selling a company, merging a company, amalgamating a company with them, or just buying a minority investment in a company, or buying a majority investment and holding it. It can be anything related to that and funding of that. And in funding, it can be again equity linked or debt. And it will also involve financing for that M&A, which is either through a bridge loan or whatever you would have seen in the past. Big acquisitions happened when Hindalco acquired Novelis, Tata acquired Jaguar, and multi-billion-dollar fundraising were provided by the investment banks involved in those deals. So it's a business where, for most of this, why it is very interesting, and I think that brings me to the answer which a lot of you gave, is that you have to be in touch with the C-level and above executives of the company or promoters, because people below that typically will not take a decision of raising equity or equity linked or debt, because that has huge impact on the balance sheet and future prospects of the company. So there is an involvement where a board level decision is taken for most of these decisions of equity or M&A or debt. And then those C-level executives or sponsors and all decide how much to raise, what to raise, how to raise, and then they appoint investment bankers to enable them raise. Sometimes investment bankers start working with the company much before they raise or decide to raise, and help them through the thought process, and then they ultimately end up raising it. On the same slide, if you can see, I have given below, and this is just for illustration purposes, sectors which the investment bankers operate in. And this is not exhaustive. There can be very other new sectors which keep getting added. Like you can say that internet is not part of technology, but a separate sector. So but typically these are the sectors which you will see. As you grow in investment banking, if you want to join an investment banking career, then you need to have some idea of one or two sectors which you can show your expertise in terms of understanding, even if you have not worked upon. If you have worked upon, then excellent, then you can talk about it more confidently. But why I'm saying this is that as you grow along, maybe when you join, you are not a sector specialist, you are a generalist, and you are roped into various transactions irrespective of what sector it is. But as you grow along, your interest and your affinity and the experience which you have worked in a particular sector will be important, because then you will become a banker for that sector. You will no longer become a generalist. Like, as an example, I cover financial services as a sector, right? And I cover a few other sectors as a part of my profession. So you have to over time become a specialist in a particular sector, which will help you then move up and always constantly be in touch with the C-level executives, promoters of that particular sector. Now, moving ahead, what is that we do? I can tell you that I think most of you don't know what we do, unless you have a brother, sister, friend, colleague who is actually an investment banker. It looks very glamorous from outside, but what we do is a lot of hard work, lot of hustling, lot of all-nighters for delivering to clients what they need. And that is the reason those executives, when we need them, they speak to us, they kind of give us business, and they prefer us over other people because of the hard work which we have put in. Quickly, key activities, what we do is origination. Now, origination is a very broad term, but just to make it simpler, a deal doesn't come to investment banker on its own, generally speaking. An investment banker has to sit and decide which companies may come for fundraising, why they will come for fundraising, and then think of a way based on which they will approach that company so that they can get the mandate to help it raise funds. And more intricate, more in detail, the banker is able to think about that aspect and approach the company, the more likely chances the investment banker will get the deal. And that's why as one grows in the profession, it is important that you have the relevant sector knowledge, because without the sector knowledge or ability to think whether a company needs capital or does not need, whether a company should merge with another company or not, should they acquire another company or not, you will not be able to answer that question. So you should have got 10-15 years of experience before you can actually become a sector banker. And using your expertise of the sector, you can think whom to pick up the phone on, why you should pick up the phone, and what should you say. Now, coming to the next prong of investment banking or next activity, which is pitching. Pitching is more like after you have decided or after you have made up your mind that these are the reasons why you want to call a particular company, the call which you make to that company is called basically a pitch. Pitch also can be where that company calls you and calls some other banks, 7-8 banks, and says, why don't you tell us what should we do, or how should we do it, or which bank we should select and why. And then you say that, oh, I have done this, that, and we call this in our parlance a beauty parade. So it's much more than a beauty parade, I can tell you, because we are not so beautiful, but we have to sound and be intelligent. We have to kind of speak through what the company may need, may not need, without even having much interaction. And that is where your prior engagements with the company, with the sector, and the knowledge of that becomes very important. And during the pitch, you can discuss everything from your credential to markets to regulatory and timing and valuation and how you will market the company. After pitching, company typically decides which investment banker they will go with. And once they have decided which investment banker they will go with, we get into the grind of execution. Not to say pitching and origination takes as much of your bandwidth as execution and pricing, and they are more sensitive and more important prongs of investment banking than execution. But without execution, you will never get revenue. So I don't want to underplay the importance of execution. A lot of people want to only be a origination banker, but without execution and pricing, you cannot complete a deal and you cannot get any revenue. Like I have started my career, I did investment banking for a very small time, for 3-4 months in an organization, then left it, did all the MBA, CFA and all that, came back to CLSA, joined as an associate, did execution for 7-8 years before I started becoming a origination banker. And now I spend like all my time doing origination. Execution involves various activities and difficult to cover it in this session, but it involves documentation. It involves preparing the materials based on which you will go to the stock exchange and file. It also involves basically providing support to your senior team in doing what they want you to do. And post execution, it will also involve working with stock exchange and your client to make sure that the stock actually which you are working for, all the post issue filings have happened, all the money has gone to the right people. Like an IPO, the money has gone back to the people, or they have got the shares, and so forth. Now, I have covered some bit of execution and pricing, but this is a little more detailed slide on execution. The key aspect of execution, let me put very simply for you, is 3 pillars of execution. One is documentation, because every transaction involves some kind of documentation, right? So you have to be aware and available to coordinate with all the intermediaries, which may be lawyers, which may be auditors, which may be registrars, to coordinate that. Second is regulators and regulation related understanding. It is very, very important, and I cannot underline it, that the more you are on top of execution, the better you will be at origination as well as execution, because you will be clear on what to do. And the third part of execution is coordinating with, as a banker, I'm saying, coordinating with all the intermediaries. Now, some people will say you spend a lot of time in documentation, some will say on coordination, but between the 3 is where you kind of spend most of your time executing and deciding what you want to do. This, some bit of it I have covered, but we talk to our clients about structuring, about diligence, about regulation and compliance, about who are the intermediaries you should hire, how the markets are, when you should launch the deal. Even if you are fully ready with the deal, doesn't mean that the deal is done. You have to make sure that the market is right for the deal to get launched. And that is something which investment bankers play a very important role in advising when to launch a deal, how to price a deal, what should be the right price at which you should launch, who are the investors whom you should approach, and then, as I said, pricing, allocation, and post-market. Now, placement, as I mentioned to you, is a process which is more pre-listing. Typically, it can be post-listing, but it is more when you have not listed, you kind of typically run a placement process. There, again, the activities are slightly different from what you do at the time when you are listed. And it starts with, after you have got mandated, this is a company for which not many people know anything about, so to say. So you have to prepare a teaser, and the name comes from that you have to tease investor to look at this deal. And that teaser should, it's like an elevator pitch where you say in very short 1 page or half a page or few slides what the company is all about and why one should look at it. And if people are interested, then you move on to signing an NDA, non-disclosure agreement, and maybe even before NDA, sometimes you do a management meeting and then you sign an NDA, and then you share a larger information pack with the investor who's interested, which is a detailed presentation, may go into hundreds of slides and model, and then detailed meeting with management and so on and so forth. Now, the amount of time which a particular investor spends when the company is not invested versus when they spend with the company is listed is very different. Like typically when the company is listed, when you do an investor meeting, it's a 1-hour meeting, out of which 10 minutes is pleasantries, 30 minutes is presentation, 20 minutes is Q&A, and that's about it. They may have a follow-up call with either the company or the analyst or the research guy who are covering the company. In an unlisted scenario, these meetings can go on and on. Maybe people spend 100 hours, sometimes 150 hours on that company, or even sometimes 500 hours, depending on how complex the industry or the company is. And that is something which company can do during the process of understanding the business, or they can do at the part of third stage where they have given some basic terms which they will be interested to work with on that basis with the company or invest in that basis, and then they get into detailed due diligence. And due diligence again can be done on your own, or you can appoint intermediaries to do it. A lot of big fours like EY, KPMG, Grant Thornton, and so on and so forth do it. And there are different kinds of due diligence. Commercial due diligence, where the business fundamentals are questioned and how they work, which is into commercial and business DD. Then there's legal DD, whether there is any legal related issues, litigation and regulatory issues. And then you kind of decide, yes, I will finally go ahead with it. And then you sign on the dotted line and finalize the transaction. This whole process, without the origination bit, which itself can go on for years or months, this process can take anywhere between 6 months to 9 months. Sometimes if both parties knew each other, everything is done and dusted, then it may happen in 2-3 months, but typical timeline of this is 6 months. Now, this is a snapshot of what activity happens in M&A, and this is very different from the first two where you were raising equity or debt. By the way, the last two kind of activities, placement or so to say IPO or raising capital from markets, both are similar for debt and equity. There will be nuances, and this call will be too short if I start getting into those, but debt guys are typically who want more covenants, rating agency comfort. They will require more disclosures around cash flows. They will require more disclosures on assets which are used as collateral, and so on and so forth. M&A, I can tell you, is a business and is a activity which investment bankers have to be really totally different, made up of different material to do it. This starts itself with a thought that a company can merge or amalgamate or buy a B company. And that thought process of why that can happen or should happen is something emancipates or comes out from a banker. He thinks or she thinks why a company should be bought out or should buy out another company, because this is a particular activity which is lagging, or this is something which they can get. Sometimes people acquire companies for growth of a geography. They are already there in North India. They want South India, so they acquire a company there. And there can be many different reasons for acquiring. They can acquire a company for talent. They can acquire a company for just for getting the intellectual property. And for once you have identified the reason, you have to kind of bake that story. You have to run that strategy with experts in the sector in your organization, and if at all no name basis, you can run it with maybe people outside, and then kind of go and present it to the decision makers, which are the sponsors or promoters or private equity guys, who will decide, yes, this makes a great sense, yes, we should do it. They will mandate you, and then the execution starts. Now, execution again will be very simple or similar to the other execution processes, where there'll be a documentation, there'll be diligence, there will be regulatory aspects. But the most important part of M&A, I can tell you, is confidentiality, right? They have to be very close knit and keep the idea to them. Otherwise, any other peer bank, any other competitor, if they get a whiff of what they are doing, it can be a deal spoiler. So it is very important that you keep the team which is running this M&A transaction very small, but at the same time very well informed with each other. Typically in investment banking, we use code names for our deals. So if say a Reliance is buying, a Reliance Jio is looking to Facebook to put money, we will have a name to it, right? So you will, just by seeing the name, you will not understand whether it is Reliance or Jio deal. You need to be a deal member and you need to get the emails of those deals to understand that. And typically email ID or all communication on those deals are based on that code name which we kind of assign for. Again, without getting into detail, it involves signing a definite agreement based on which you kind of agree to do the deal. M&A process also may involve delisting a company from the stock exchange. It may involve doing an open offer where you buy beyond a certain threshold, and as per regulation, you are supposed to make offer to other minority shareholders. So it can involve a lot of different things which may be very different. Now, as a landscape to investment banking, I've just put for illustration these names, and I may have missed some names, so apologies at the outset, but I have put names and I made only one distinction. There are different ways of cutting these investment banks: large, small, bulge bracket, non-bulge bracket, equity focus, debt focus, M&A focus, and I can keep going on, but I've just done a simpler version for you guys, which is foreign banks, which are more, when I say foreign banks, basically they will have headquarters outside India and they will have global offices, they will have global reach with investors, they will try to bring cross-border M&A into account. You can buy a company outside India, you can buy someone from outside India can buy a company into India, and so on and so forth. Domestic banks are more domiciled in India, they will have presence in India. Maybe they will have better reach with retail and HNI in India, but they will not have so much reach outside India. And everybody has their own strengths and weaknesses, which if you have been in touch with any of them, then you will maybe know it better. And when you start working on it, you start understanding, okay, what are your strengths, what are their strengths, and how you can play to your advantage. Now, coming to the important point, which I think we all have joined here for, which is what kind of role or what kind of career investment banking offers you. So in an investment bank, this is again, this is more like illustration. If you are really a rock star and you perform really well, you can jump, hop, skip and jump few steps, maybe a few years if you want. As I said, I have joined as an analyst, then I moved and did my MBA and worked for a few years in different organizations, including HDFC Bank. And then I joined CLSA as an associate, and then I moved on to become managing director in like a span of 10 years. And I have been here for like 2-3 years doing what I'm doing right now. So analysts typically are guys who get hired after graduation, whether it is engineering or BCom or whatever. You work in an analyst program typically for 3-4 years. And then either after that you go for your master's or you get promoted to associate and continue working. Associate program for a foreign bank typically runs for 3 to 4 years. And in some cases it can be 4 to 6 years. So I've just taken a conservative estimate. Sometimes associate directly gets hired from a MBA school like I am or otherwise, and they will have a 5-year program for associate before they become a VP and associate. Now, when you become a VP and associate, the key change which happens, I will just talk about the key change. From an analyst to associate, the key change will be that you will become the key, the burden of executing the transaction will lie on your shoulder. When you become an associate director, then you start having some So there is one thing which is important is that for associate and director or president, vice president, you start getting some sector alignment. You start going whether you want to be in this sector or another sector because you would have done a lot of deals in that sector. Then when you become a director, the key change is that you start getting P&L responsibilities. You are supposed to get deals and originate, and you get benefited out of those deals. And then you become a ED or a MD, where obviously for that particular sector, you are running the P&L. And country head is like more like where you have spent across divisions, verticals, and then you become country head where you oversee multiple businesses, including investment banking, research, and everything. Now, analyst roles I have just given on the right side and which you may be interested, but what we want from an analyst is, as I said, that he should be ready to give in long hours to prepare the pitch books or documentation work if he's doing execution or responses to RFPs or presentations for clients or roadshows. There are a lot of databases which we kind of maintain, which we have to kind of keep in place. He has to attend presentation and conferences and talk to the councils and be on top of regulations, which he can keep telling to his team members that this is what changed, so that they can keep updating their clients that this is something which is very important and which we should keep in mind. They are the key members who drive the due diligence work along with the client and the investors who want to participate. And they are people who will do the modeling bit, and maybe the logic of it will be given by an associate or a VP, but the whole modeling and putting the data in place and how the logic will work is their responsibility. And they will also be the key guy to coordinate internally to make sure that the deal is progressing. Now, the overall responsibility is always on the deal leader, which may be a managing director or a ED or director, depending on who's leading it. But the person at the bottom, it is very important that they lead from the front, right? And it is important that you spend time during this time instead of thinking when I'm going to become associate, because the learning which you will have as an analyst, you will never learn as an associate, and the learning which you have as an associate, you will never learn as an analyst and VP. So, and only when you have learned those things as analyst and associate, you can be a good VP or a good director or whatever. Investment banking, as I told, not many of you will know the direct pros and cons, but let me first discuss the pros and then maybe I will come to the cons. That it has very steep learning curve. It gives you, as I said, initially you are a generalist, so you get exposed to various industries. If you have been an investment banker for many years, you become so up to date on the market, and you get the ability to hustle and manage your time so well that it kind of holds you in good stead when you kind of go on and do something else. Obviously, networking and client management is something which is at the core of investment banking, and I can't emphasize how important these are. And in fact, a lot of investment bankers ultimately end up becoming either joining their client to do some strategy or something, or they join a buy-side firm to kind of run a particular sector because of the sector knowledge. And one thing which investment banking clearly brings out of you is to become leaders. I've not mentioned here that, but the whole thing is that you lead. Lead manager is a term which you use a lot in investment banking when you're doing IPO or issuance or even an M&A transaction, and you learn to lead all your peers or your other fellow banks or auditors and otherwise. Now, there can be some cons. If you think of it as a con, you need to really have passion for what you're doing. Otherwise, you will feel, oh, where I have got stuck and what I'm doing, because you have to put long hours, unpredictable. You may have planned for a vacation on the weekend and your client calls you on Friday and says, oh, I need something on Monday. And for that, you can't do it if you don't cancel your vacation. Obviously, we all try to balance it, maintain redundancy so that you don't have to cancel it. But there can be occasions where you may have to do it. And sometimes the stress may get better of you. So investment bankers, I've just put what are the educational qualification which we hire typically from the pools are from MBA, CFA, CA, MS Finance, or even BCom, IIT. As I said, the graduates are hired typically as analysts. The master, after masters, you get hired as associates. Important thing, if you can take from this, is not on the left side but on the right side. The skill sets which you have developed while doing those courses is very important, and that only you will know whether you have a good communication or presentation skill, whether you have a good technical or analytical skills, whether you can work under pressure, whether what is good with you, only you can answer. And only then you can become a good investment banker, because not everybody can present as well as analyze. So if you know that you can analyze something well, you have to go in a sector, in a field where maybe that analytical ability of yours is required. If you think that you have a good communication skill, then you can choose your sector or your field accordingly. So it is very important for you to realize what you really want and what you really think you have as a skill set. I can tell you that I'm not saying you need to have all the skill set or you need to be like really good at all of them, but my sense is that if you have some of the degrees mentioned and some of the skill sets, it's good enough for you to become a good investment banker. Now, CFA as a degree, I can tell you, any degree for that matter, and CFA for more so for that matter, it gives you all the right ingredients, right? It talks to you about ethics and standards, what you need to follow, which is very important. As I said, you're on the private side, so it is very important you realize where you are. It prepares you for the analytical role, which you have to prepare models, valuations for companies when you are pitching to them, and your ability to understand balance sheets and P&Ls and how you kind of work with that becomes very, very important. How you analyze a statement, how you interpret a regulation is very important. And CFA as a degree is also important because, like, you guys have dialed in from various places. I don't know which all countries, but it's a globally recognized degree. So if you have done a CFA, it comes with the recognition that you will have some basic knowledge of ABC, right? Whether it is a discounted cash flow method, whether it is a CAPM, whether it is a WAC, whether it is these are things which you will know. And when you walk into an interview with that degree under your belt, it gives you that ability to actually show your experience, what you have gained, as well as the degree, right? What you have gained. So it is important that you concentrate when you're doing your CFA on what you're learning, and then you use that learning when you are appearing for any interview, investment banking or otherwise. I can tell you, just getting a degree doesn't get you a job, but if along with the degree you have got the skill sets which underlines that degree, then I can assure you that you can become a very good investment banker. And at the core of all that is your understanding about sector and client. As I said, I can't overemphasize that point. And that, again, a degree like CFA really helps you to understand a particular sector, ability to analyze and do it. With that, maybe I'll just end and open the floor for questions. Over to you, BD.
Thanks, Anurag, and thanks for your insights and I think the deep dive. As a reminder to the participants, this presentation is available for download, so you will be able to download it through the link which is shared and use it later for reference. Anurag, we have hundreds of questions, if I can use that term. So I don't know whether that means that people have not understood or whether they have too many follow-ups. But one thing quickly, you mentioned that you started at the bottom of the pack and then you grew your way all the way to managing director. What about lateral entries? People who have domain experience, people, how do they get in Ivey?
Yeah. So lateral entries will not happen at the bottom of the pyramid.
Right.
Lateral hires happen more at senior levels. and they happen because of either the sector expertise or the client connects with the person gets, or a product expertise, right? So say, give you an example, CLSA, we were primarily capital markets and equity and debt bankers. We wanted someone to kind of start a M&A practice for us, and we hired a person laterally from outside who has worked in that field from outside. So he came because of his product knowledge, which is M&A.
Sure.
Sometimes you may hire a person for his sector knowledge. Sometimes you may hire because he has very good clients whom he kind of works with, and once he joins you, that client will start doing business with you. So it can be for different reasons, but lateral hires typically happen at a senior position.
And speaking on M&A, typically, when an investment banker is helping the client acquire or sell something, he will present all forecast and everything, and what the future holds, and that's how the value is determined. So eventually, if the M&A doesn't work, is it company's failure or is it the investment banker's failure?
No, BD, that's a very good question. Let me give you an example, okay? Maybe that will make it clear. And this is just an example I'm using, and you can get into hundreds of examples like this.
Sure.
Tata as a group made 2 acquisitions during GFC or around GFC.
Sure.
Tata Motors acquired Jaguar Land Rover. Tata Steel acquired another organization. I'm just lost for the name, Chorus, right?
Yeah.
And both acquisitions were made on similar times. Both were mega acquisitions, but one did very well, which was the Jaguar and all that. Now in COVID time, you can question it.
Yeah.
But the Chorus one did not do well.
Yeah, I think they eventually sold it, right?
Exactly. So now the question is that maybe the investment bankers in those deals were also common. Some of them were common, if I remember.
Okay.
Now, was it a failure of the investment banker that one deal really worked out well and one deal did not? Or was it the failure of Tata's, or was it the failure of Chorus, or was it the failure of Jaguar Land Rover? I think it's difficult to say that or look at it that way. It is probably the way to look at it is maybe where the market was not right, maybe the company was not there, maybe the time was not right, maybe the funding at which you got that deal was not right. It can be a lot of things, and you can get into a post-mortem. That important thing is when you are in that seat to decide, the person deciding is the person you can blame for, right? And it can be either Tata's or investment banker, but I think both were great deals made with great intentions, and one worked out, one did not. So I think you have to always see, deals are made, some of them will work, some of them will not work. But if you have identified a particular need for a company and then you go and kind of buy that company at a price for which you have not overpaid, I don't see why you can fail. But sometimes you end up overpaying because it becomes an auction. Sometimes you buy a wrong company. Sometimes there are cultural crashes. So there can be different reasons for deals failing. Sometimes it will be investment banker, by the way. So I'm not trying to escape that question, but not always.
Got it. Now, you did mention, a lot of different moving parts in terms of M&A, LBO, IPO, maybe follow-on offerings and other things. But are these, teams also structured differently for listed as well as unlisted markets within IB itself?
Yes. So I will tell you the common thread is sector.
Yeah. Okay.
So if you are covering a sector, you will look at both listed and unlisted.
Sure.
Because as I said, you are anyway on the private side, so you cannot go openly and talk about it anyways. But the junior guys may be looking at capital market only, then there will be a separate team looking at unlisted only, because as I said, the process is very different. And if you don't have a team which is experienced in both listed or unlisted, you will find a challenge, because just because you have done listed doesn't mean you can do unlisted, and vice versa.
And how different is this from the transaction analysis or financial analysis team, which typically a big four would have? I understand their focus would be more on due del, and that might not include structuring. But will there be overlap for people who are working in some of these profiles who want to move to IB?
Yeah, absolutely. Yes, there will be overlaps. There will be, if some, so it depends on your skill sets, as I said, right? If you are in Big Four and your analytical skills are good, but you don't have any communication skills, difficult for you to move to banking. But if you have decent communication skill with very strong analytical skills, you can absolutely move to a private side and start with modeling and everything, helping your client and move up, develop some sector expertise and kind of become a banker, senior banker basically.
Sure.
So you can move laterally. In fact, we always look for people who are there if we are hiring laterally, who have experience, prior experience.
And you did mention, tight deadlines and, under which I think you'll have to work. What about work-life balance? Is there something called work-life balance in IB?
Let me, I don't know if how many people on the call have a business or the parents are into business, and they should go and check if their dad has any work-life balance, right? Sometimes you may see their dad working on a Sunday because maybe he is in a factory which is closed one weekday, but it's open on a Sunday. Maybe he's in another profession where he works on Saturday, definitely, and Sunday sometimes. So see, every profession, BD, requires you to give certain amount of time for you to settle down in that. So I can tell you that when I was a young associate, obviously there was no work-life balance, but it was okay. I think my life did not require me at that time. My work required it, right? So when my life requires me right now, I am there with my life and I am there with my work. So you have to decide if you from very early stage decide, oh, I need to have 50% time for my life, then you can't become an investment banker, because you have to give adequate time to your work. And then there will be a time or pivot when you will start understanding a lot of things and you will take less and less time to do a particular thing. You will become an expert, and that time which you have saved because of your expertise, you can give to your life.
And in the beginning, we asked this question, and one of the options was you want to become an investment banker just because you read Monkey Business. How similar or different is the reality with respect to what's mentioned in the book?
It's very similar. So if anybody has read it and want to become it, welcome. But we make 30 versions of same presentation and you guys will go nuts saying what is the difference between version 29 and 30, what is the difference between version 25 and 30, right? And as you go up the hierarchy, maybe the person above your immediate superior will have reinstated the changes of your immediate superior. So yes, as you grow old in your system, you can joke about it and ask them, oh, why did you do it? But I can tell you, we are all also very rational and logical beings. We don't believe in dealing with monkeys, right? We want the work to be done as per our logic. And as you go higher up, it has to be done as per a logic of a MD, because he is the one who has to explain that logic to a client. So if it is not as per my logic, then I will not get that mandate. Why? Because I will not be able to explain to my client the way I want it to be explained. So all that is part. And over time, what happens is the monkeys who work are able to understand how I will predict or how I will react, and they are no longer monkeys. They turn back into human beings. So it is very much similar, but to the whatever was there in that book, I think it was a revelation to me. It is very much similar.
Sure. And of late, obviously, there are things, like data science, coding, you have this Python and stuff. How relevant are those things for people who want to make investment banking career?
As I mentioned, and in my slide, any kind of degree or any kind of skill sets is very important and relevant. I will not say this is more relevant than that. A CFA is more relevant than MBA, or MBA is more relevant than CA. Yes, if we have a person who has a CA and MBA versus a person who has CA, maybe CA MBA is preferred just because he would have done some leadership programs, some managerial roles. But if a person has done Python and he can make work life easy for people and kind of do code which can help us get quick analysis of things, welcome, right? Add value to that system, and that way he will save time for everyone. So any kind of skill set which you have done, like I will tell you, in my early life, I learned macros. After that, I've not got time to implement it. Does that mean that my knowledge of macro is waste for investment banking? Absolutely not. That knowledge resides within me. I've chosen not to use it. So whatever you are learning, if you want to use it and you believe you can use it, then you can become a better banker.
Sure. And the common question, obviously, everybody wants passionate people to work for them. So apart from obviously showcasing your qualification, which most people would have in terms of, a CA or a CFA or an MBA, what else can you do to obviously, get your foot in the door?
Sector knowledge, right?
So for a fresher, what do you suggest for a fresher to start working on if his dream is to get into an IB maybe 6 months or 1 year down the line?
So if you are wanting to get into IB and you are just a graduate or a CA or whatever, lot of times you may not know anything about markets unless your family is into trading and everything. You may not know about any company which trades in India or exists in India, which themes are playing out in India. So it is very important for you to understand. In investment banking, it is very important to understand one or two themes, not all of them, just one or two themes. Because if you are able to demonstrate that this particular theme is something which I understand clearly. So either you should understand how a particular company is being valued, and not valued based on your CA knowledge of WAC and whatever methodology, but also in real life, see that company's valuation, see your WAC and all, and try to make sense how it is being valued, right? And why it is different from some other company. Try to deep dive into certain sectors and see why you like it or not like it. And if you like that sector, whether that sector is trading as per what you think it should be trading, what are the key drivers of it, what are the themes which are going. Like in COVID time, if I'm evaluating a banker after COVID, one question which I would want to ask him is, okay, what do you think after COVID, which sectors will be in demand, right? You don't have to become a CA or a CFA or an MBA to answer that question. But if you are a well-read person and you have kind of followed the news, you have followed the themes, you will be able to answer that there is this one ABC company. Because of this reason, they will be more preferred post-COVID, and hence it makes sense. And that answer is good enough to impress an interviewer when you are interviewing for investment banking.
Sure. In terms of career, I mean, how fluctuating or how volatile is an IB career? I mean, times like these when you don't have much business, maybe, I mean, obviously these comes every 10 years, but it could be with any other career, maybe buy side or sell side. But would you say IB careers are more volatile than rest of the careers?
Depends what you're comparing with. If you're comparing with a consultancy or you're comparing with a buy side, you're comparing with trading, each have their own volatilities. In investment banking, I can tell you that there is a clear path. As I mentioned in the slide, from analyst to MD to head of that sector or country or department, there is a clear path, and each path is there for a reason. So as you said that in 10-15 years, there will be a GFC, there will be a demon, there will be a COVID, it may be named something else or it may be something else, but it will be something which will give you zero revenue or zero bonus for that particular year. But it is very important that you put your head down, learn some new skills during that time, pick up some knowledge, and then when the things pick up again, you are there to talk to your client again and kind of deliver the thing. Because investment banking, like any other business, works in cycles. Sometimes cycles are shorter. Generally, cycles are shorter nowadays than they were earlier, but you always come out of it. It's always a cycle.
Sure. And I think you did mention the hierarchy in an investment bank. From your experience as an average, can you throw some light on the salary ranges for each of these roles?
So see, it depends whether it is a domestic bank or a foreign bank. But analyst role nowadays from a domestic bank to a foreign bank can be anywhere between 15 to 40 lakhs, right? It's a big range, but why I'm giving that big ranges depends on you are being hired by a foreign bank, you are merit list, dean's list, top of your class, what you are, right? And associate starts, say, somewhere middle of this pack, and then kind of goes up again. And then you keep adding 20% on each level, basically, right? And that is where you kind of arrive at the top of the pyramid. And then on top of that, you get ex gratia or whatever, depending on your performance.
Sure. So depending on which level and which, but otherwise, is the variable component more than the fixed component? Is that how it works?
Yeah. Generally, in an investment banking, see, no one wants to have a very big fixed cost, because that is something which on a, like in a downturn, then that will start pinching a particular organization very badly, and then they will have to retrench, which is typically I have seen happening in a lot of other global investment banks. So if you are able to keep your fixed cost reasonable, then and give a higher variable, then you are able to avoid that. And that's why in investment banking, you see that typically that your variable will be higher than fixed in good years.
Sure. And, you know, in India, we have a license called merchant banker.
Yeah.
How different, I mean, obviously it's required, and most of the IB firms would also have a merchant banking license. But how different would that be for an IB which doesn't have a merchant banking license?
Sorry, this question I did not get. So you were saying,
are there IB, which doesn't have a merchant banking license and still continue to perform in terms of the IB functions, or do you by definition needs a merchant banking license to do investment banking?
No, you can do certain activities without a license. You may need some other licenses, not merchant banking. Let me put it that way. But for doing an IPO, doing a QIP, you need to be a merchant banker. So there are certain designated activities which the regulator, capital market regulator, SEBI has told, and this merchant banking also license is given by SEBI. So you need to have that license to do that activity. But there are certain activities, if you want to raise a private equity money for a company, you don't need a license as such. You can help them as an advisor, raise that fund, take your fees, and go away.
All right. And the final $1 million question. Someone is looking for a job. Are you hiring?
So right now, I will be surprised if any investment bankers are hiring. Because as we discussed, we are in COVID times, and here obviously redundancies are there in the system. We are all trying to make sure that we are able to get as much deal as possible from a perspective of keeping ourselves gainfully employed, if I can tell that, right? But as I said, once cycle turns, I'm sure all of us will jump and kind of would want to hire people. In our case, right now, as such, we are not hiring, but we had one or two guys who decided to join something else. So we are looking at one or two positions to fill.
Sure.
At the mid-level and the junior most level.
Thanks, Anurag. And I think, as a reminder to participants, please complete your feedback and polling. It helps us design your ongoing continuous learning in a better way. The recording of this webinar will be available on the CFA Institute and CFA Society website very soon. We look forward to see you in the next webinar, which is tomorrow, on career strategies in tough times by Binod Shankar. Thank you once again, Anurag, and thank you everyone for joining.
Thank you, Bedi. Thank you, everyone.
Copyright 2020. All rights reserved. This program is designed to give accurate and authoritative information in regards to the subject matter covered. It is distributed with the understanding that CFA Institute is not engaged in rendering legal, accounting, tax, investment, or other expert advice. If legal advice or other expert assistance is required, the services of a competent professional should be sought.